Continue on Pandora because it rose more than 8% in its first day of trading. It's a sign investors are flocking to tech IPOs. Joining us now from Chicago is Josef Schuster. He is the founder of the Chicago-based IPOX Schuster. It helps to oversee about $2.5 billion. Josef, you're a shareholder. We know that you have a stake in Pandora. I imagine you were happier at the beginning of the day with that almost 60% gain versus the end of the day. I mean, more than 8%, still not bad. Where did you expect it to finish?
Well, I mean, first of all, Pandora has a potent mix of, first of all, it's a health industry, and then the offering terms are small size and small amount of equity offered. So this really has a positive feedback trader in this type of allocation, which we get, makes us believe it actually has some upside in the short run. Over the long run, fundamentals will matter, and then obviously, you know, these issuing characteristics can well be toxic for the stock as well.
Josef, at what price would you consider selling this stock?
Well, we probably would wait for 3 months, and then after 3 months we would see where the stock is, and then sell or buy more indiscriminately, depending on how fundamentals come in. So
you're not necessarily a long-term shareholder, but you're not looking to flip it in the first few days of trading.
Yes, that's correct. Yeah, we would have a target. We would have a target weight to the company. We already took off some target weight at the first close, actually, and then, you know, we would see in the long run how it actually develops.
Josef, how concerned are you that you could lose money on this? Dom Chu, one of our reporters just with us, talking about the competition that Pandora faces against companies such as Apple, such as Amazon. What red flags are out there for you that might make you consider selling even earlier?
Well, I mean, we see Pandora really as an addition to a basket of IPOs which we hold, and spin-offs which we have, like a Philip Morris, a L'Oreal, like a Visa, like a HCA, like a Nielsen. And we will likely hold it like with a respective weight, which probably will be in the 0.5 to 1% range over the medium to long run, actually.
Josef, are you lining up to buy shares of some of the other tech IPOs coming down the pike, Groupon, maybe Facebook in the not-too-distant future, Zynga? Or are you perhaps a little concerned that the investment banks are going to start pricing these IPOs better and the gains will be harder to come by?
In some of the specialty IPOs you just mentioned, actually, I mean, I do believe there is positive feedback still coming into the market. They will pop probably like a Zynga. The key is really in this immediate trading, how much they offer in terms of, you know, in terms of amount of money raised. You see actually from abroad now, like a Glencore, like a Samsonite, they are down 10 to 20% based off the IPO prices, is because those are large deals. So for these small deals, I mean, the deal size, the issuing characteristics will matter. We do prefer specialty tech US and also consumer discretionary stocks, which with a dedicated domicile here in the United States. That's where we're going to participate. The other Chinese IPOs, global large caps, we probably stay away for the time being. Risk is too high.
Josef, thanks so much for joining us. Josef Schuster, the founder of IPOX Schuster, joining us there from Chicago.